Hello investors and traders. Today we will create a 10,000 bucks portfolio, dividend portfolio. I will show you how I screening stocks, a technical analysis, and of course I will show you a model portfolio for dividend stocks. And let's start with the research, with the screener. It's a FinViz financial visualization. Then we can see my filters. Look, I put the market cap at quite large. It's over 10 billion. Then the country, of course, US. Current ratio, it's better to be than 1 because I would like to have a safe stocks in my portfolio, that I don't want to see any problems with liquidity in the near term, so it's better to be more than 1. Then of course dividend yield is over 3%, unless I don't see any need to have stocks in portfolio. And of course I would like to have a profitable company, so I put the net profit margin over 10%. I remind you that net profit margin, it's when we take the net income and divide it by the revenue of the company. And by these filters, we can see a list of 25 stocks. It's the company, sector, industry, market cap, and it's now filtered by the market cap. Here is the bigger and the smallest one. So we have such companies like 3M, Cisco, Pfizer, Merck, Intel. And from this list I have chosen 3 stocks. The first of them is Pfizer. If we instead point of valuation, Pfizer is the third one, so the P ratio is less than 10, so it's okay. Everything that less than 15 for S&P 500, and for now it's we can say that it's cheap. The PS ratio, price per share, is also less than 3, it's fine. Let's have a look on a chart of Pfizer. So I will use the Elliott waves analysis. So in my mind, here we had the impulse, it was the first wave, then correction the second, then the third, the biggest, the largest wave in impulse, then a triangle, this was the fourth wave, and the finishing, the fifth wave, it was the end of the impulse. After this, from 2018, in my mind we had a correction. Let's move to the weekly chart. So the correction usually have in the form of ABC, so A, B, C, 3 waves, and the first wave can be have the structure of the first, second, third, fourth, and here the fifth. So it's very clean, very beautiful. So it's, I guess, so it the right structure. Then so here the correction is finished, and now in my mind we have a new impulse. So it was the first wave, the second, the shortest short correction here, and then the third one, usually the longest wave in the impulse. And now in my mind we are in triangle, some kind of small correction is the fourth wave. Maybe also actually here it's a support level, it's about 47, so I'm not sure that we gonna break it. And after this I'm expecting another move up. It now bounce, it can be the fifth wave. So in my mind I'm expect actually I can tell you my target for Pfizer for future years. It can be 1 minute, it can be 76. So my target for Pfizer is 76 bucks. And let's come back to our stock list. So I have chosen for you 3 stocks, especially for you, 3 dividend safe stocks. All their market cap for all of them is of course more than 100 billions. The current ratio is more than 1, and also another one parameter which I always consider is the debt to EBITDA. The ratio of debt to EBITDA, it's operational income of company plus amortization and depreciation. So it's better to have not more than 3, not more than 4. So here all the companies, it's very safe. Any problems with that, less than 1, no, only Pfizer have 1, but it's okay. In 1 year it's can its operational income can cover all the debt, so it's very nice, very cool. The PE ratio, yeah, we can see it's not expensive stocks. Only Cisco is 15, but I remind you that Cisco is an IT company, so at the 10, 15 nowadays it's okay. And at margin it's very impressive. You can see the Pfizer is 28, Cisco 22, and Chevron it's oil stock, it's oil and gas stocks. And the dividend yield for all the stocks, we can see that of course more than 3%. And also one nice parameter, the 3-year dividend growth rate. We can see that all these stocks are raising dividend last years. Average I think it's about 5%. And please have a look that Chevron raising its dividend more than 6%, so it's very nice to have this stock in the portfolio, because the dividend that you're receiving are also show a very nice growth. And let's have a look on the model portfolio. Yeah, we can see 4 positions: Cisco, Chevron, Pfizer, and cash. Don't forget that cash it's also a position, so I have 4 positions here. For each one of them it's 25%. Why I choose to put some money in cash, and don't forget that this cash is also an asset. So now it's the market is very rocky, it's downturn, so if the stocks we will see a little bit lower, so it would be a good opportunity to buy another stocks to the portfolio if you don't have cash. Especially now, if you don't have cash in the portfolio, so it's a problem. If we have 10k portfolio, so we will have 2,500 for each one of this stock. So for me it can be optimal portfolio for these amounts. In my channel I have a lot of videos about dividends, about stock analysis, stock market, technical analysis, fundamental analysis. So if you like this video, don't forget to subscribe into my channel, and see you on the next time. Bye.